I think Twitter and Snap have similar problems, and that is, lack of vision. They're led by founders, and the founders seem to treat the companies like it's their children, and they just don't see anything wrong with their children, and so they're really reluctant to change anything. I think you can see what Jack Dorsey did with Alex Jones, and how he, Jack was the protector of the First Amendment for a week before he finally booted Alex Jones off the site. They're not taking steps to drive revenue growth. They seem like they just think if you build it, it will come. And I think investors have gotten fed up, and you're not seeing the revenue growth that I think investors expected. They thought Twitter would follow a Facebook trajectory, and it did not. Snap, everybody's given up on. I just upgraded because they got rid of one of the biggest impediments to growth, which was Imran Khan. He was horrible, and I'm glad they got rid of him. They got rid of their CFO in May and hired a smart guy. So I think that these two stocks are positioned to turn around. Snap is showing me that they're serious by getting, shaking up personnel. Twitter's not showing me that it's serious by keeping Jack in charge. So that's the difference in my ratings.
Got it. All right. Snap is lower, though, by another 2.6% today. Michael Olson, you've got a buy on Facebook, Amazon, Netflix, Google, and Apple. But I understand that you sort of have a ranking, a preference. And with Amazon in particular, you're interested in this new 4-star store. I saw it. I'm curious as to why you place a lot of importance on this for Amazon.
Well, yeah, we like Amazon. It's the top rank in the group there for the FANG names. And I think the key with the store is it just shows that Amazon is working to become a bigger fabric of our daily lives. That's going to really continue to be the case with more retail presence. And there was the rumor out of several thousand new retail stores over the next few years. I don't know if that's going to prove to be the case, but we definitely think there's going to be more of a physical presence. And most importantly, we think this advertising opportunity for Amazon is going to drive upside to operating income, not only this year, but over the next several years. We think they'll drive mid-teens billions of operating income from advertising over the next few years. So I think that'll end up actually being the bigger driver here.
Michael Pachter, it's been a rough go for Facebook here, the worst quarter since 2012. They have a new data breach. The Instagram founders are leaving. What do you make of Facebook's prospects going into the fourth quarter, and whether there are bigger problems sort of under the hood?
The recent news, the Instagram founders leaving, was perceived really negatively. But if you look at the reason that they left, and that is that Facebook's going to monetize their platform, to a greater extent, that's good for shareholders. I think that those two guys were done tweaking with the user interface, and I actually think Instagram's about to explode positively. So I think that one's good. The data breach is serious. I mean, this is not somebody misusing data and advertising without paying. This is somebody who actually breached 50 million accounts, got control of the accounts. That's a nightmare. And I'm glad that Facebook told us about it, but I'm waiting for the other shoe to drop. So at least Facebook was proactive. That's a serious problem.
Michael,
neither of those I'm sorry. Neither of those is the reason the stock is down. The stock is down because the CFO said that spending is going to rise faster than revenue, and that pissed investors off. And we lost $100 billion in a day because nobody wants to see that. Amazon was doing that a few years ago. They changed their minds and they decided to only fund growth out of profitability, and the stock has gone up 8x. So I think if Facebook follows the Amazon game plan, the stock's going to work.
Michael Olson, your favorite stock among these 4 or 5 that we've been talking about?
Well, it would be Amazon. We do like Apple as well. As far as Apple, we raised our numbers today really related to just increased confidence in ASPs for the iPhone cycle. And we already were modeling above consensus for units, and our survey that we did of iPhone owners suggests that they are tending towards the iPhone XS and XS Max. So that increased our ASP in our model, and we expect both upside to ASP now and units, which should drive overall revenue and EPS upside.